Good morning and thank you all for being here. We are Lehman Group Investments and today we'll be sharing our momentum and value strategy with you. So first we're going to go through the strategy, look at the background and details behind creating that, and then move into our portfolio, and then the performance of the strategy from back testing over 2 periods. As you can see in this slide, this strategy is actually two-pronged by employing both momentum and value strategies.
At the core for momentum, the focus is to buy winners and sell losers. Momentum is proven to be a viable long-term investment strategy and it's performed well by taking advantage of market volatility. For value, the focus is not just buying normal value stocks, but really emphasizing high-quality value stocks. We found that combining these two strategies was really successful. When it comes to actually screening for the stocks, we focus on small-cap stocks in the United States. For momentum, we filter for the top 20 percentile stocks with the highest one-year total return, which selected the winners. For value, we followed Joseph Petrowski's theory to use additional filters on profitability, leverage, and liquidity in order to select high-quality value stocks. To first select value stocks, we filtered for a low price-to-book ratio. Because a P/B ratio of less than 3 is typically considered a value stock, this is the number we used. For profitability, we selected the top 20 percentile stocks with the highest profit margin. For leverage, we wanted stocks with a debt-to-equity ratio lower than stocks in their respective sector, since debt-to-equity ratios are highly dependent on the type of company and industry. Lastly, for liquidity, we filter for stocks whose current ratio in the current year is greater than the current ratio last year, which can be an indicator that a company is growing into its capacity. After applying all the filters but before actually backtesting, we're left with 51 stocks. The pie chart shows the percentage of stocks by sector. With materials consuming almost 65% of the portfolio, there's not as much diversification as we would like, but we believe that altering some of the criteria could potentially give us a more diversified portfolio. Now, in terms of backtesting the strategy, we did this over 2 periods. This period shows December 2009 to January 2016. As you can see, our portfolio beat the market's returns by a significant amount over most of the period, and we also generated a strong alpha. The information and Sharpe ratio are not as strong here, but show more promise in the next period. This next testing period is from December 2016 to June 2019. Our cumulative portfolio returns greatly exceeded market returns, and the strong Sharpe ratio, positive information ratio, and high alpha clearly demonstrate the strength behind this strategy.
Because we rigorously backtested this strategy and performed better than the market overall with relatively strong performance metrics, we definitely feel that you could benefit from implementing this dual momentum value strategy. If you have any questions, we'd be more than happy to answer them now. Thank you so much for your time.